ऑडिओ कसं बंद करायचं? ऑडिओ कसं बंद करायचं?
स्पीकर आहे.
Hello everyone and welcome to Darkhorestocks. The language that we are going to use today for this Google Meet is going to primarily be English. However, if you have any queries, you can ask the questions at the end of this session and we'll try to answer it in the language possible, maybe in Hindi or in English. So question and answer will be leaving for the end of the session. Now starting with the session, we are going today to talk about the Darkhorestocks website. A lot of new users are joining Darkhorestock website, but they are not sure that how to find the companies that have already been suggested in the past, or how to find the new ideas that are already say good to explore at this current market prices. So basically we are going to start with the introduction to Darkhorestock website. Sorry. Okay, so when you join the Darkhorestock website, you should just go to our home page, and when you go to our home page, you can find that all the stocks that have been suggested from the beginning are listed on the main page itself. So I'll just share my screen, and we can proceed with the website. Okay, so everyone is able to see this main page, Darkhorestock website. Okay, so this is the main website.
Yes.
Yes. Okay. So every week a new idea is suggested at the top, and you can find the latest idea over here on the latest Darkhorestock idea. Just a minute, people are still joining. Okay. Yeah, so you can find the latest idea on the top of the page, that is the latest Darkhorestock idea. When you scroll down, we have designed the main page in such a way that you can find the list of almost majority of the stocks that have been suggested in past say 3 or 4 months. So you can just get a basic idea about the name of the stock and some of the basic overview about what the company does. Majority we are trying to keep almost at least say 20-25 ideas on this page, so you don't have to go to any other page to find the list of ideas. When you just scroll through the page, and if you come across a company and say that you find that this is the business that you are interested in, or you feel that this is something that you should explore for long term, you can just click on the company, and you can go on the full report to check out the company report itself. You can find the full report from this, we are clicking on the name of the company. Now, one other question that we get a lot from the users is that why are we not suggesting the target price or exit price of the stock? See, the point is that we are trying to do, we are in here for long term, and we don't see any stop loss that users should follow in order to invest for long term. So that is why we are not providing any stop loss at all. The other question is that why are we not providing the target prices? One of the key reasons for not providing the target price is that by providing target prices, people get completely dependent on us. We don't want people to be dependent on us. We want users to do their own analysis, to have their own conviction, and then take any investment positions they want in the company. So if we say, for example, if we are going to give you 30% or 35% upside, then what people are going to do is people just say not read the report or not get the basic introduction about the company at all, and all they do is they just say go to the target price, read the target price, and just jump into the stock. Just a minute. Someone. What is happening? Okay, someone is just interfering with the screen sharing. Just a minute. Okay. Okay, my screen is visible. Is my screen visible?
Yes, screen is visible, but I think in
visible.
between somebody else is also sharing the screen.
Yes, I got that. Okay, if yeah, I'm presenting it right now. Yes, if you feel now that someone is taken over the screen, just let me know. I'm just switching to my main screen. Okay, so yeah, where we are on the target prices, and we see that a lot of people have been asking about the target prices. Now, one thing we do is that if you read our report very carefully, we are designing the report in such a way that you don't need to ask any questions, and if you have any questions, and when you ask the questions, we can exactly find out that what up to what portion are you reading the report. Because see, some people are so foolish that they just ask about the target prices or what the companies are doing without going through the report. We have designed the report in such a way that we can exactly pinpoint that up to what point have you read based on the question that you are asking. Now, we are also providing target prices, but we are not providing the target price directly. So say for example, if you check our latest report, that was an India Nippon Electricals, and when you scroll down into the last section, say conclusion section, you can see that what we are trying to do is we are trying to give a hint that the upside possible is at least 30%. If you read these lines that I am highlighting, that market share and the growth prospects, if it is expected on a prudent basis that the sales of the company may grow around 10% from the pre-COVID level for a year ending March 2021. So what we are trying to say over here is that we are expecting the sales to grow 10% on a pre-COVID level. So what is the pre-COVID level? So if we check from the pre-COVID level, uh, say the sales that were of the company in March 2019. I'll show you. Okay. So if you check, the March 2019 sales were 525 crores. 525 crore rupees, and if we add 10% to that 525 crores, then we can see that the sales is expected at 577.5 crore rupees for the year ending March 2021, that is this year. But now taking this into account, that the COVID situation, then what would happen is that the sales may be targeted for the next year on March 2022 basis, because we are forecasting earnings for the coming year. And as you check that, just a minute, uh, someone is not mute their system. uh, you are not understanding, creating very much disturbance.
Hello.
Hello.
Sir, may I ask you which screen have you used it, sir? Screener you have used it.
Yeah,
I can go there.
I have used the screener website. You can check the screener. We are also using Tijori Finance.
Yes.
I will just share all that also with you. This is a screener website that we are using, and
Okay, sir.
another one is Tijori Finance. It basically provides you then a complete data analysis of all the stocks. Okay, India Nippon Electricals. So you can get the sales and the company financials over past 10 years from this website. It is a single platform that you can get everything in detail, say profit and loss statement, balance sheet, each and everything. Okay, so yeah, someone is not mute. I mean, is there any disturbance in the sound, or everyone is able to hear me?
Some Siddharth Mehta need to mute himself.
Yeah.
Siddesh Mehta.
Yes, yes, yes. Okay.
Yes.
Yeah. Okay. So yeah, so where we are discussing about the company that we are expecting 10% upside, say for March 2021. Now, given that the COVID cases are rising, we can expect that for March 2022 we are expecting more than 10% upside of sales. So if we say that 14% margin, and if we predict on an example basis, we are not saying that it is going to be, for basic understanding, if we are going to predict that say 25 rupees earning per share is going to grow 10% for the coming year, so that will give you the earning per share of 27.5 rupees. Now, the another line we are discussing in this thing is that what we are saying is that we are expecting 110% upside in sales, and we are also expecting the slightest expansion in the earnings multiples. Now, what does this mean is that expansion in earning multiples is that we are expecting the price to earning multiples to expand. The currently India and Nippon Electricals, let's say for example at 24 rupees earning per share, and the current market price of 354 rupees is trading at price to earning ratio of 15, PE ratio of 15. But when we say that earning multiple is going to expand, it means that its peer companies, say for example Motherson Sumi, Bosch, which are in the same field of business, which are like supplying the same different types of automobile parts or in the automobile manufacturing components, are trading at significant premium valuations to their current earnings. So what does this mean? That if we look at these price to earning multiples of other companies, we can say that the price to earning multiples of other companies is significantly high, and India Nippon is trading at very deep discount price to earning multiples. So for example, if we expect the price multiples to say expand from 15 to 18 to 20, and given that earning per share is also increasing 10%, so if we multiply the basic number 27.5 into expected price to earning expansion of 18, we can see that the target price comes around 495 rupees, and 495 rupees given for the current market price, say, is going to give you at least 39 or 40% return. Now that is how we are trying to express what is the target price in this report. We are providing the direct target price in the company report, and that is why the users are finding it difficult, because they are not reading the entire report and they are not understanding what we are trying to convey. Our view is that users need to develop their own conviction. We want users to think ahead of time. Let's say for example, just for understanding, let's say for example, we are expecting that the COVID situation is going to stabilize in the coming 4 to 5 months. So what is the first thing that is going to happen? For example, after 6 months the COVID situation is stabilized, businesses are returning to their normal business cycles. So what is happening is that people want, now there has been no exhibition or no promotion and no new product launches have been so far done this year. So we expect that there may be significant business marketing activities taking place in the coming period. In Mumbai, there are a lot of conventions and expos held every year. Let's say that if business starts returning to normal and the expo, exhibitions and everything is start taking places on a normal basis, which company is going to benefit for the most? Nesco India, and this is purely for example understanding. So yeah, I just want to think like this. That is what we are trying to convey. That Nesco holds the biggest convention halls in the Mumbai, and if we expect that 6 months down the line the company is returning to its normal business cycle, then the expo business exhibitions are going to boom, and that could be the biggest beneficiary for the Nesco. But if we look in the current market situation, the Nesco is completely down, and the company is also fundamentally sound. So when you check this report, you can find that company has significant amount of cash balance, which is quite a sustainable balance as compared to other companies that are struggling with leverages and the debt companies. So you can explore the Nesco and you can take your own conviction that no, if the COVID situation extends, then more than 6 months, it may take more than a year to come back to normalcy. But the business is good, the management is sound, and the company is fundamentally sound. So this is the company that you should be having the company in your portfolio. The another example I would like to give is one of the companies of KNR Construction. Let's say that you have a significant exposure to infrastructure sector, and you are very bullish on infrastructure sector. You expect that the government is going to boost infrastructure in a very big way by giving grants, road highway contracts, making smart cities. But if you check that the majority of infrastructure companies are heavily leveraged. Now majority of the companies are extremely leveraged, that a slightest increase in the interest rate will put a very big pressure on their margins. Now if you check our dark horse stock, we have suggested KNR Construction twice or thrice before. Now KNR Construction is a very good company, and the debt to equity ratio of KNR Construction is very comfortable. So when you say explore KNR Construction, you see that the KNR Construction is doing good business, the debt to equity ratio is very less, and you find that a very good opportunity. Now what happens is 6 months down the line, let's say interest rate starts increasing. So what people are going to do is that people are very bullish on infrastructure companies, but people now want to shift to the companies that are less leveraged. So what would happen is that if we are invested in say IRB Infra or Shobha Developers or any of the companies that are in infrastructure, people will start shifting their money from those companies to the companies that are less leveraged. Now these less leveraged companies, say for example KNR Construction, is going to be a big beneficiary for the significant flows of the fund that are diverted from other companies, irrespective of the sales. Now sales are not going to increase at all, but the company is benefited because of its low leverage. Now this is something of conviction that we want you to develop on your own. We want you to look at those companies and think that why is this company having an advantage, computational advantage, not because of its better sales, good management, but because of its fundamentals, the less leverage, the cash balance, and the promoters very say firm and say the promoters are very hungry for the growth. So there is the kind of companies that we want to explore. Now people are also saying that if how do we judge the management? Sometimes you can honestly say to honestly, sometimes you may be able to judge the management and sometimes you may be wrong, but over a period of time you will try to understand that what the management is trying to do and what the management is actually doing is at all not in the sync. Then you can easily identify that the management is not sound at all. So these are the two questions that we are getting a lot, and that is why we are not providing the target prices, because providing a target price is just not going to benefit at all to any of the investors. And that is one of the reasons that we are also providing target prices or a view in such a way that people reading the full report might be able to understand that what we are actually trying to convey. So that was the first part. The second is that you can check the website where we can find the list of all the stocks. The next is the categories. Basically we have divided our website into 4 basic categories. The dark horse stock ideas that we suggest every Sunday. The another one is idea exploration. So far we have not suggested more than one stock in this category. Basically what we suggest in this category is the stock that we are expecting significant merger or demerger activities and value unlocking in the business. So that is what we are trying to say exploring this stock. We have previously suggested CESC when there was a significant amount of demerger activities taking place in the CESC. The management wanted to streamline all of its business in different companies, and we are expecting say 50-60% upside in CESC. That is when we have suggested CESC. We'll come to infographics in a bit. The holding companies are the companies that are holding significant amount of shares of other companies. One thing I would like to make you clear is that holding companies do possess an enormous value, but sometimes you may not be able to realize that value at all. One of the key reasons is that the holding companies, even though they possess significant value, the management is not going to sell their shares and say return money to the shareholders, because holding companies are meant for a purpose that they are going to hold shares forever. One of the recent suggestion of our ideas in this holding company category was Tata Investment Corporation. If you see that Tata Investment Corporation has a value of 15,000 crores, so current market capitalization is just 5,000 crore rupees. Now that gives an immense valuation gap in the company's holdings and the company's market capitalization. So we have clearly mentioned in the report that we do expect a potential upside of 100% in this company. But see, 100% is not going to come, because Tata Investment Corporation is not going to sell all its shares today and return the money to its shareholders. They are going to hold it forever. However, over a longer period of time, you can see that this valuation gap decreasing slowly. Say for example, if the valuation gaps even decreases more than 50%, that still means that we can get 50-70% upside potential. And majority of times, if you check the holding companies, management is not very, say, investor friendly, that they want to create wealth for the shareholders. So if we see some of the companies, you may find that these companies are stuck in the price range or the same market price for so many years, and they are not moving at all, and they are failing to deliver any meaningful return to the shareholder despite the huge value in their company. So one of the such example that we have suggested is Haryana Capfin. This was a penny stock idea that we had suggested quite a while before, and this company is holding the shares of Maharashtra Seamless. At the time of writing this report, the company had 134 crore worth of share of Maharashtra Seamless. Now, market capitalization of Haryana Capfin was just 25 crore rupees. So you see, there is a valuation gap of 5 times between the market cap of the company and the holdings that are in the company. But yet, if you check the Haryana Capfin price chart, Haryana Capfin has failed to deliver any meaningful return. Any meaningful return. The stock is currently trading around 25-30 rupees, and since we have suggested around the same price, probably around 35-47 rupees, it has not even got to 47 rupees at all. So investors, say, buying these stocks having significant value to make a quick buck is not going to earn them anything. These are the type of investments that are going to be, say, in your portfolio for more than 5 years, 10 years, even if you can imagine. However, some of the ideas that we are suggesting in Tata Investment Corporation, in the dark horse category, that we are trying to make a distinction between the penny stock ideas and the dark horse stock ideas, because dark horse stock ideas, apart from the value, are also in the same recurring business cycles. So say for example, they are earning, they are doing sales, so chances of those companies being stuck on your portfolio are very less as compared to penny stock ideas. So this is one category that we want users to bring it to the notice, that these are the holding company stocks. Once a while, say around 2 to 3 months or 5 months, around after 5 months, we suggest one company from this category where we see that there is a huge valuation gap, and users should at least say hold small quantity of these shares. So maybe after 2 years or 3 years, they can just say that this is the share that we are purchased, and there was a significant valuation, and you can get a significant amount of price appreciation given that you have enough patience to hold it for 2 to 5 years. The another and the last company is penny stock ideas. A lot of users are, say, jumping into penny stock ideas. First of all, penny stock ideas are not meant for investment at all. We want users to look at the penny stock ideas. We want users to identify that these are the companies where there is a significant opportunity, but that is not meant for investing. Penny stock ideas are extremely risky. Once again, penny stock ideas are extremely risky, and it can lead to complete erosion of your capital as well. Forget the gain, you can just lose your complete capital. And that is why we are asking users that just to study this company, buy say 5-10 shares if you want to, so that those stocks can be part of your portfolio, and you can have it under your watch. You can analyze the companies on a daily basis, and say if you presents an opportunity, then you can just buy some few quantity shares and make money. But what people are doing is that people are investing heavily in the incognito stocks or penny stocks, instead of investing very good amount of money to dark horse stocks. And see, penny stocks are meant to fail, and when they fail, they are asking the question that why are we suggesting these kind of companies, and why should we invest in penny stock ideas if they are not good. See, once again, that is why we are not putting more emphasis on penny stock ideas. However, recent ideas, say for Make Money Organics, Make Money Organics has delivered a significant amount of returns in the short term. Now, that is not going to mean that other stocks are also going to deliver significant returns. The Marks and Pharma, if you check, the Marks and Pharma has not delivered a single percentage of returns in suggestion. The same goes for Exchanging Solution as well. So, sorry. So, so once again, what I am trying to say is that penny stock ideas are meant for informational purpose only. However, if you invest a significant amount in penny stocks, that is not going to, say, give you immediate short-term returns or significant returns that you can say that you can earn and you can invest in other fundamental good companies. Forget about that. That is not going to happen. So please make sure that you do not invest blindly into penny stock ideas. The another one question that we got a lot of users is that how do we access the list of all the stocks that have been suggested in the past? Well, you can find the list of stocks. We'll share you the screen share of the dashboard where you can find the list of all the dark horse stocks, and I'll be explaining that in a later part of this video. The next and the most important thing on our website is infographics. Now, what actually are infographics? Well, infographics are basically the visual representation of the ideas that have already been suggested in the past. Say for example, if you look at the company Whirlpool of India, now Whirlpool of India was suggested before, but however after some time we felt that users might have missed on to this idea and there exists still significant potential or upside possibility for this. Then we are say presenting a small infographic presentation of this company where you can just go and read a basic understanding about the company, its business, and if you feel that no, this is the company that is going to be a big beneficiary in the coming period, then you can explore it for the long term by reading the full report. The recent infographics include RPSG Ventures. Now we already suggested RPSG Ventures before, and RPSG Ventures was up around 15-20%. But we feel that no, RPSG Ventures has still potential. Why? RPSG Ventures is basically investing in other ventures. We are all familiar with InfoEdge India. InfoEdge India holds around say 20%, 15 to 20% of Zomato, and that has been a very big value creating portfolio investment for the InfoEdge India. And we can see that InfoEdge India has scaled up from 1800 rupees to 4500 or 5000 rupees. Now that had been a significant risk. So what RPSG Venture is doing, that RPSG Venture is also trying to invest in other potential startups. 5 years down the line, if say RPSG Ventures find another Zomato like company or any good venture which is hitting a unicorn valuation, then we can also expect that significant value appreciation in RPSG Ventures as well. This is how we try to say present the idea in a very shortest possible manner. So just by reading through or having a glance of the idea, if you feel that no, this is the stock that 5 years down the line is expected to appreciate significantly, we can invest in this stock. We can read the complete report, you can read the full report. That is the same goes for the Birla Soft. We also recently suggested Birla Soft this Friday or not. The management is very hungry. Company has a very significant amount of cash position on its balance sheet, and the company is completely debt free. So yes, these are the kind of way that we try to bring it to your notice, that ideas that have already been suggested in the past and you might have missed on, you can check these ideas via infographic, and if you feel that no, this is something that shows some immense potential, you can explore it for the long term. That's all for the infographics. Now coming to the question how to find the list of all the stocks, is that you can just go to the dashboard. You can click on the dashboard button on your website and you can go to the dashboard. Now we have also mentioned some of the features of the dashboard over here, and the upcoming features for the dashboard that we'll be discussing shortly. When you click on the go to dashboard button, you'll be redirected to a page where you'll be asked to log in based on your Google account. So we don't have any other facility, so you have to sign in with your Google account only. And when you sign in with a Google account, this is the, just a minute, okay, yeah. So when you sign with your, just a minute, I'm sharing the screen. So how does the dashboard look like? So yeah, so this is the basic dashboard. How does it look like? So the dashboard has been divided into several sections. I will walk through each of the section in the quickest possible. This is the bifurcation. This section shows the number of stocks that have been delivering returns in the range or that have been defined. Say for example, if you hover on this bar chart, it shows the number of stocks that have delivered above 60% returns from the date of suggestion only. That is, say for example, if we suggested the stock at the 300 rupees and if it has delivered 60% return post 300 rupees. So there are 30 stocks. The second one is the range of 40 to 60%, 20 to 40% and positive returns, and the same goes for the next say loss up to the 10%. Now stocks that are down up to 10%, stocks that are down in the range of 10 to 30%, and the stocks that are down beyond 30%. So this is the basic bifurcation of all the dark stock ideas. One thing we would like to bring it to the notice of all the users, that this dashboard is meant for the basic analytical purpose of all our ideas suggested. Now I'm not saying this for the promotion of the dark stocks or for floating, but if you check any other advisories out there, you will not find this kind of dashboard. One of the key reasons that you will not find this dashboard is it opens up their business practices. Majority of the dark brokerages or the advisory services are not providing this kind of potential ideas, and when they present their performance on the dashboard, you can exactly find out that how good they are and how bad they are. So they are never going to provide you with this kind of dashboard. If you come across any, please do share us, because we have been tracking so many people and so many advisories from past over 2 to 3 years, and not even single one of them is just showing this kind of performance. That is because they are afraid if they show their exact performance, they may not be able to charge the users what they are charging. However, we are not here for the money, so we don't care that if our performance is good or bad, but our aim is to provide only good fundamentally ideas. This is the second section is over for overall performance. You can see that almost 96% ideas have delivered positive returns, and 30 ideas have delivered negative returns. Now, this is tracked on a live market basis. So for example, if stock is down say 10% after hitting a 30% target that already mentioned, it will not be come up on this radar, because that is one of the lack, or say we say shortcoming of our dashboard, because we are not able to fix the prices, we are only able to show the live market prices. The third section is from the companies from the each sector. It shows that basically how many companies you have suggested from the specific sector. For pharmaceutical sector, say for example, we have suggested 6 stocks. From engineering sector or engineering heavy sector, there have been 7 stocks. It gives you a basic overview of what are the companies that have been suggested from the specific sectors. The next section is the daily records. So in a market basis, daily market basis, this section refreshes, and it shows the top 5 best performing ideas today, and top 5 loser ideas that have been losers today. So for example, on a Friday, say Greenply Industries was up 5%. That are the top 5 ideas. Say CM India was up 6% around. So this shows the top 5 ideas, and the loss record shows the top 5 losers for the each day. On overall performance, it shows the top 5 best performing ideas post suggestion. So the stocks that have delivered the best returns after the return suggested, so Garware Polyester has delivered 200% returns after suggestion, and along with the date on which the Garware Polyester was suggested, that is August 11 2020. You can find the 5 stocks top 5 performance, and top 5 stocks that are losers. One another thing that we would like to do is that people please do not that people are jumping into ideas that are down significantly. Please make sure that you don't buy the ideas that are down significantly, because chances are that there may not be significant updates in these ideas. Say for example, if you have suggested Sharda Motors, now actually Sharda Motors is not down 74%. There has been some activity of split or bonus which has not been adjusted, and that is the reason that it is showing a 74% downside. On the Sharda Motors, we have to adjust the same from the back end. The Thomas Cook is also not down 78%. Actually, when we suggested Thomas Cook, Thomas Cook was holding the shares of Quest Corp. Post suggestion, what happened is there was significant demerger taking place in the company, and company had split the business. The travel and hospitality business was in the Thomas Cook, and the shares of the Quick Quest Corp were transferred to a different company. So that is why the stock is down 78%. That is why we suggest users that please do not buy the stocks that are down significantly before doing any strong research, because there may be some post events which have led to the significant downside in the prices of these stocks. And the last section is all share values. This is how you can get the list of all the dark horse stock ideas that have been suggested since the beginning. You can check our performance from the beginning, and that is, say for example, if you go back in time, that we have posted the list from September 3 2018 to April 13 2021. Now that is, say for example, more than 135 ideas. Now a lot of people are facing just a minute. It's not just muting is okay. Yeah. Now how to navigate through this section is that we don't have any search bar, so you can just search on a specific stock. However, we do have appropriate filters to say arrange stocks in ascending as well as descending order. When you click on this date, you can see that the date is from the newest date to the oldest date. When you click on it, you can find the ideas that have been from the oldest one to the newest one. The same goes for the company name as well. You can find the list of all the companies in the alphabetical order, that is from A to Z, and Z to A reverse as well. If you want, say for example, to find the companies that are say well below 100 rupees, and you can just click on this filter, and you can find the stocks that are trading in a range of 100 to 200 rupees, or say more than 200 rupees. You can just click on this current market price, and you can find the list of stocks that are say very costly or trading more than 5,000 rupees. So these are the stocks that are trading in range of more than 5,000 rupees. You can find the companies that are top gainers as well as top losers. See for example, if you just check, the top losers are Thomas Cook, as we discussed, Sharda Motors, Power Mac Projects. Power Mac Projects is an infrastructure company. Pratap Snacks, Stovek Industries. These are the top losers. And if you check the top gainers, you can see that Amber Enterprises has delivered 280% return, 200% Garware Polyester, Info Edge 180%. So now what happens is, sometimes what happens is that the stock falls after achieving a significant upside. We are trying to embed the same feature into this dashboard. For example, Info Edge India had hit a 52-week high of 5500. So the stock has fallen from 5500 to 4500. However, we are working on adding a separate column where you can see the 52-week high and low as well of the specific stocks, so it will help you better in the decision making process. And you can find the recommended prices, the prices at which the stocks are suggested, and the sector to which the stock belongs. That was for the dashboard. So you can just go to our website, check the dashboard, and you can find the list of each and every stock that have been suggested uh, over past 2 to 3 years. One other thing that people are asking, requesting your user us to that do is that they're asking that why don't we add separate sections for news and other features as well. So if you check the new upcoming features, then you can find that we are working on adding nifty charts as well as daily price change for the stocks. Now currently the feed is 20 minutes or 15 minutes delayed. We are working on decreasing the latency to around 1 or 2 minutes at all, and in the coming period. We are also working on 52-week high and low for dark stock ideas. High made after suggested. So for example, if we suggested 300 rupees and the stock had hit a 52-week high or all-time high of 600 rupees, and now the stock is trading at 500 rupees. We are also working on showing that the high made after the suggestion, so that it can help users that no, this stock has already hit its all-time high and currently trading 35% down from all-time high. So these are some of the features you can just check, and we are working on more advanced features. But the constraint that we are facing is the lack of resources and the time, because it costs us a huge amount of money to develop this dashboard, and providing it for completely free is not getting us anywhere. So we are delaying the designing the new dashboard from quite a bit time, that we may be doing it the next year when we can just receive contributions from the users. One of the another question that people are asking a lot is that what is in it for us. Well, we are not here to make money. When we started Darkhorsestocks website back 2 to 3 years, we were like following so many different brokers, so many advisories, yet we also signed up for some of the premium subscribers, some premium advisory services, like we were charging 35,000, 40,000, 50,000 rupees, and yet we failed to come across a single advisory which was delivering any meaningful ideas or meaningful returns. And that is when we started that no, that investing community, people are like say people want to earn money in the stock market, or people are interested in stock market, but these advisories are out there are just say they are taking money from the investors and they are not delivering any meaningful returns. So we started this Darkhorsestocks website, and we follow a contribution model such that you can contribute whatever amount you like on an annual basis. We don't charge anything for our services. You can just check our website that what others are charging. We also provide a basic comparison of what others are charging and what you are able to get on from this Darkhorsestocks website. Mutual fund tools is basically an analytical software we are developing, so it tracks the mutual fund activities, that what shares they are selling, what companies they are buying, and this is under development. It would be ready in around next 2 or 3 weeks, and once it is ready, we will be also giving the same demo for mutual fund tools as well. You can just go through the page and you can get the idea that what are the differences between Darkhorsestocks and other advisories as well. We have presented in a shortest possible manner, so you can get more idea about the same. The last section is about FAQ section. For FAQ, you can find the basic questions that are repeatedly asked by the users, and we have tried to answer in a short and the summarized manner. Apart from that, if you have any questions, you can feel free to write us at WhatsApp or on our email address mentioned over here, that support@darkhorsestock.in. Apart from that, I don't think there is anything to discuss for the website. However, now we would like users, if you have any specific questions for the website, then you can just go ahead and ask those questions specifically to the website. Please do not ask for the target prices. Yeah, additionally, people are also asking that who are the people behind say Darkhorsestocks. Basically, at this point of time, we have not disclosed our entire team. One of the reason is that some of our analysts are not say very keen to disclose their names. Therefore, we are trying to work on a situation where we can show the name of the other team members as well, but not that of analysts, because their affiliation to some of the jobs, or their jobs may put their careers in jeopardy. So that is the reason that we are not trying to disclose their names. One more question that we are getting a lot is that how do we allocate the portfolio, or say if we are suggesting new idea every week, what is going to happen? I mean, there may be so many stocks in the portfolio. How are we going to keep a track of the stock, and the portfolio is going bigger and bigger, we are not able to track the stocks. See, people, if you follow in the market, say people are saying that Warren Buffett used to having 15-20 stocks, But see, Warren Buffett is having 15-20 stocks because they are equipped with a lot of management and they have huge amount of cash and balance on their balance sheet, and they are not say shy to take a loss on 2 or 3 companies. And if you check his performance over past 10 to 20 years, they have not delivered any meaningful return. It was even very late in the very late in say 2000s when they invested in Apple. So they are not technological following companies. Additionally, when you are a professional and you have so much amount of money, you can go for 15 to 20 stocks when you are completely sure that these are the companies that are going to perform in the coming period. Ramdev Agrawal of Motilal Oswal often comes on the television and he says that you can earn 10, you can make 10,000 to 1,000 crore rupees. Now these are all to be honest, the promotional measures. This is completely myth. No one in the stock market has by investing made a 10,000 rupees to 1,000 crore rupees. It's all a myth because you are not going to find companies that are consistently earning 35% returns year after year. You have to switch your portfolio from one company to another. Say if you realize 35% returns in the company, you have to switch your portfolio to next company and you have to keep moving on. So that is one of the reason that please do not just say for example try to find 15-20 stocks in a portfolio. However, we suggest a small exercise, or what we are doing, we will try to do is that uh, that what we do is we have divided our portfolio into two parts, in fact three parts. The third part is very smaller. So the first part is that we are doing 60% portfolio in, say we are dividing the portfolio in 60-40. The 60% of the portfolio consists of the stocks where we have very high conviction. Okay, so such as that for example we see that so for example Tata Investment Corp is a very good company, so we allocate significant amount of companies in this category. Now we leave the 40% for the dark horse stock ideas. So for example, when we feel that this dark horse stock idea is doing good, we allocate 1 or 2% of our portfolio into that company, and the remaining 1 or 2% we leave it for the penny stock ideas. Say combine all penny stock ideas should consist of at least 1 or 2% of our portfolio. So say for example, if we are going to lose that capital, it should not bother to our other portfolio parts. That is the smallest exercise that we are following. Now if you ask us what is the number of stocks that we are holding, so I would like to say that we are holding more than 200 or 250 stocks. But see, some of the stocks, they are going to perform continuously, but you cannot make that portfolio, that stock allocation significant sizable of your portfolio part. Say for example, if you check the Pfizer stock, now Pfizer is an excellent company and it is going to deliver returns seriously after years after years. So that is the company that you are not going to sell at all. So make that company a part of the remaining 40% of your portfolio and try to add on more dark horse stock ideas. However, if you feel that this specific dark horse stock idea does possess a huge potential, you can add it in the more quantity as well. Now one more reason that we are not suggesting specific stock is because, say for example, if you are already invested in an infrastructure mutual fund, now there is no point of us suggesting that you invest in this infrastructure company because you already have an exposure to infrastructure sector. So what we are asking users is that you can take the positions based on what you feel is appropriate. Say if you are already having an infrastructure company, there is no point of buying infrastructure stock. You check out the other companies, say for example FMCG companies, automobile companies, and that is why we are not suggesting the specific ideas for each and every individual. We want users to take their own position based on what their conviction is. That was all for the dark horse stocks. If you have any questions, we'll be happy to take 5 or 10 questions because some time is pending and we have some time for 5 or 10 questions. Okay, so if you can just one by one just have any questions, please do ask us.
Hello,
Yeah.
I'm Milan here.
Yes.
I wanted to ask you one question is why we are not giving, industry P. It should be good to give industry P, average P,
See,
for comparison purpose, and just give nearby 2-3 competitors peer comparison. I know it will be additional infographics and more resources will be going, but if you can just give brief, just 2-3 lines, it will be good.
yeah,
Comparison. Please
because
consider it.
yeah, sure, we'll consider the same. But see, sometimes what happens is that the reason we are not giving industry P is because every industry is say trading in different P. Now, to able to find very close competitor is very difficult. And additionally, what earning multiples the same peers are say commanding or demanding may not be very fruitful for the company that we are suggesting. So that is the reason we are not suggesting, but yes, we will definitely take this into account and we'll try to give you a basic overview of the what industry P is.
Yes, otherwise we have to go to screener just to check that.
Yes, sure. We'll try to take that integrate that into our report in the coming reports as well. Yeah.
And I'll also suggest that you can suggest, what retail investors should do in terms of investment by seeing this. Like you said verbally, but somewhere in the website you can probably suggest, like 60% in this kind of stock, 40% in other kind
See,
of stocks or
if
something.
we do that,
And
what would happen is, see, we thought of that, but if we do that, then what people will do is people will just replicate our portfolio. They will not do their own research or any kind of analysis, because we have experience in the past. And if you check our Telegram group, we used to provide, in fact, the target prices of the company, and people were like just coming on us that why is the target price not achieving. Now we are saying that the target price is based on the earnings multiple of next 2 years, earning forecast of next 2 years, and people were like, in after 2 months, if the stock was down 5 or 10%, they were coming to us, and why is the target price not being achieved. And sometimes what would happen is the target price of 30% gets achieved in say 10 or 20 days, and people are like, now should we sell the shares, should we sell the shares. We are telling that if 30% is achieved in 10-15 days, there can be significant upside as well. So people are not understanding what we are trying to convey, and that is one of the reasons that we are not providing the direct information to the investors. I'm sure this clears your question. If you have any further questions, please do let us know.
okay, probably, you can consider it as a revenue model going forward, like
Yeah.
probably paid
Yeah.
services where you can,
Mm.
provide target and alert for exit or something.
Mm.
Because I'm just wondering how long you can, pull on just basis of contribution and your own capital.
Yeah. Yeah.
Yeah,
Yeah.
I'm sure this is costing you a very high amount to maintain the site and all the research.
Yes, 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 yes. We are finding alternatives to monetize this platform, but for a while, for now, we would like to keep this platform open for all the investors as well.
Hi, this is
I think
Babu.
that's a very
I
last.
have another question.
Yes.
Yeah, so which factors do we need to keep in mind on a stock, like increasing debt or which factor? Because I see stock suddenly dipping 20%, 30%, and slowly, I mean, we might lose the capital also. So what factor do we need to see the debt on a consistent basis or market share or?
See, I can name a few factors for you. It would be helpful, but to be honest, it is not going to help you, because the management and the operators are very fast or very ahead of you, because they are getting the news faster than all of us. If the company is in a debt or in a crisis of any kind, they are already say discounting the prices for the future. If the company is expected to give a very good sales for the coming period, that would be already priced in by the time the news of the exponential sales comes out. And the
Got
same
it.
goes for the crises as well. So you need to take a broader view, that you need to follow the management over the past. You can just go through the management commentary, that what they are expecting for the future growth prospects, and how false they have been. Say for example, if management is saying that we are going to earn 30% CAGR for next 5 or 10 years, you can just check that, and you can check their results, that have they actually made the returns that kind of they are expecting to deliver. And if they are not, then you can just take a hint from that, that management is not exactly what they are trying to show to the investors. That is how you can just get through that.
Okay, so management commentary is something that we need to
Yeah,
follow.
yeah,
So
some.
is it on the company website? We see that analyst call and con call. Are you referring to that or?
Yeah, 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 it is also, you can get a basic hint. You try to read in between the lines, that management is expecting a significant expansion in the operating margins and net profit margin expansions, but yet it is not happening over the period. You can just try to get a basic hint of what they are trying to convey from
Got it.
that.
Okay, thank you.
Yeah. Okay. So we have 5 more minutes to go. If you have any more questions, if anyone else.
Hello, Milan here again.
Yes.
See, when you are developing dashboard, can you just consider, where you think that whatever call or this thing you had given is now no longer valid, so
See,
you can say
yeah, yeah, I
closed or something, call closed, or you can say that the price has dipped further, or there is some alert or something where, if by chance somebody does not, see website and feel the price has gone down and now again we should invest, or it has gone below the suggested price.
uh,
It may be for
that
some
that
reason, as you
yeah, yeah,
mentioned.
but see, if you check, then in past we have not come across ideas that have failed significantly. If you check the stocks that have delivered significant negative returns, there is no point that we are not advising users to not invest into this. If more than 5 or 10 stocks have delivered significant negative returns, if you check the screen, as said, that Thomas Cook is already down because of demerger, Sharda Motor is down because of say split or demerger, Power Mac project is down 35%. So this can be one or two, there may be hardly one or two stocks that you may feel that we need to give you a stop call, but when you look at the broader picture, you will understand that these are the stocks that have delivered negative returns and there is no point of investing in that. Now people often ask about EPL Limited. Okay, EPL is down 23%. We are holding it in our personal portfolio. We don't understand why the stock is down 23%. We have checked the results, we have gone through the management notes and everything, and there is no significant cause that could justify that why it is down 23%. The same goes for Transpec Industries. So you can check that Transpec Industries also doing good, and yet it is down 17%. So my point is that there is no point in dark horse stock ideas that we suggest that would suggest that there is significant downside and you should refrain from investing in these companies. Okay, so that is one of the reasons that we are not providing the position that you mentioned, that closed position or something like that for all the ideas, because there are hardly few stocks that would be required such say comments.
Probably you can consider if it is, give a standard this thing. If stock is more than 15% down or 20% down, then just to prevent, it going further down, people can exit or.
See, exit is because it takes a longer time to predict the exit, because say for stock is down 15-20% in just 20 days, it may have almost 1 or 2 quarters left for the results to be out. So we cannot just say predict based on the stock is down 20% that the results are not going to come good or results are not going to bad. It may be some kind of manipulation game also. So we are not very conservative on providing the companies that are you should exit. But yes, however, sometimes users who are holding positions do send us the queries that we are holding this stock and it is down 20%. Should we add more or what? So we try to say that the stock is down 20%. You wait for some more time before having any justifiable position into this stock. So that is how we can help the investors. But adding the same to the dashboard is not going to help. We don't think that. We don't know.
Because otherwise people will have to ask individually queries and you will be flooded.
Yeah, we understand, but
time goes.
Yes, we are completely we completely know about that, but we are working on the new news feed also in our new dashboard, where you can just find the news of only those stocks that are suggested in the dark horse stocks, a specified news version. So that may take some time, so we are not sure that how long it will take before we are developing that thing.
Okay, and one more thing I wanted to check with you. Your focus is primarily on fundamental and the industry and business analysis,
Yes,
right?
yes.
You are not looking at technicals.
Yeah, we are not looking at technicals at all. See, basically what happens is there are actually, when we studied, we had three theories. That efficient market theory. Now what efficient market theory says is that the historical returns are not going to repeat itself. So we studied that when the markets are getting efficient, you don't need charts to suggest you that what is the price movement going to happen or not. One other thing is that technical analysis is useful in the markets that are very large. Say US market is very large. If you follow the chart analysis, you may be able to earn meaningful return. But Indian market is extremely small, and there are just few operators. Even if they buy a sizable position of the stock, it may move the stock up and down significantly. So if you are following the chart, I don't think it is going to get you anywhere.
Okay.
And majority of stocks we are suggesting is like in small cap or say mid cap category, where the counters are highly illiquid. So charting is not going to help apart from few 50 or 100 Sensex or Nifty stocks. That is the reason we don't follow technical analysis.
Do you believe in this dividend investing? Suppose somebody wants to, generate some regular return out of stocks
As
over and above the FD returns or something.
No. See, FD returns are the safest form of investments you should do. You should not replace your FD returns with the investment in the stock market. Never mistake that. Never do that mistake.
Okay.
Yeah, someone is
And
asked.
do
Yeah.
you help investors in evaluating their portfolios or something? Give guidance on that?
No. We don't have that kind of facility as of right now, because we are too busy with this dashboard, Darkhorestocks, and our mutual fund platform that it is coming up. So we are not in position to help you with your individual portfolio analysis. Okay, so
Hello.
yes,
Yeah, hi. Good morning. I'm
yes.
Hari
Good
here.
morning. Yes.
Actually, I have a small suggestion. One thing is, see, you're saying that your one of certain stock which you have suggested have fallen almost more than 20 to 30%.
Yes.
So if you could maybe add another column whereby you can point out this may be the reason. You were saying for Sharda Motors it has demerged, right?
Yeah. Yeah.
So you could point out so that we'll also know when we are doing our own analysis,
Yeah.
we'll know where we are missing out, so that it will
Okay.
help us in learning.
Yeah, sure. Yeah, sure. We are actually we will adjust the prices on the split basis also. It has just come to my notice right now that stock has demerged or split. I'm just checking it right now. Just to give me a second.
Yeah, sure. And
Uh,
one more thing is, so what is your
yeah.
way of investing? Suppose you're giving a recommendation. I
Okay.
expect, even I also have read it. It's a very good company. It's into specialty chemicals. We were
Yes.
expecting far more than the
Yes.
Alkylamines. Alkylamines has ran up, but
Yes.
Transpec hasn't.
Yes.
I don't. We don't know why. But suppose if the stock is falling down, how
Okay.
often and how frequently you'll average? Like Sierra,
See,
you will say
if you
that
find something
averaging down.
meaningful, because see what happens is, as I said, that there is always a lag between the news and the stock prices. So if you can just narrow the lag down, then I would say that you should double down on a downward going stock. But if you don't find the meaningful reason or justified reason that why the stock is going down, I would say you wait for the stock to reach the equilibrium price, the price that you have invested, and then you start adding more.
Okay. So
Yeah.
by the time we'll be missing out. That's what people say. I know
Yeah,
that
you
it's
miss
too.
out. That's completely fine because see, this is a market.
But
Once you lose the capital, you are not going to get back the capital. So it's better to lose out something than to say lose out the
lose out
capital.
everything.
Yeah.
I understand. Okay.
Fine.
And
Yeah, hi.
Yes.
sorry.
Yeah, one question. Is there any way you can indicate us how much percentage should we allocate to given suggestion? Because there are good stocks which we can hold for 3 to 4 years versus
That is
maybe,
what. Yeah, that
very,
is.
very short term.
Yeah, that is what I have said in before. Say, for example, if we have suggested Pfizer, okay, now Pfizer is something that you are never going to sell. Pfizer is never going to come down. If there is a significant news that the Pfizer vaccine has failed and something has happened, then Pfizer will be down around 20%. Now, again, for Pfizer, a company that is extremely cash rich company with a big parent having multiple patents all over the world, it would possess you a very good buying opportunity as well. So I cannot comment on exactly which are the stocks that you should good to hold for long term, but you need to identify based on the investing pattern that you are following that if this stock is good, I should give a significant allocation it to my portfolio.
Okay.
Yeah.
Hello. Yeah.
Yes.
Hi. Good morning again. How much of there are certain companies which are into capex, right? So
Yeah.
people think that because of this capex, the earnings might increase. That means the top line will increase.
Hmm.
So how much of weightage you give for all these things for capex and turnaround companies?
You need to go for individual companies because management may give you a hint that what are they expecting in terms of capital expansion and what are they expecting in terms of sales increase over a period of time. You can project that sales increase with the operating margins the company has, and then you can take the position on that company. You cannot just go blindly that no, they are doing significant capex expansion does mean that their sales is going to increase. There will be proper hint in the management that why they are doing the capex and what is the benefit they are going to expect from that capital expansion in the company itself. You may find that in the company reports or management discussions.
Okay.
Yeah.
Thank you.
Okay. So for if you have any questions, you feel free to write us to the WhatsApp. We are just running out of time because this Google Meet is limited to only 1 hour, and 1 hour is almost complete. So it may be end very abruptly. So I would say that we are concluding this session. We have also recorded this session and we'll try to post it online in case if you have anyone who has not been able to watch this session or who is not able to join on the session due to the full capacity of this meet. Okay, so thank you so much for joining. If you have any questions, feel free to write us on WhatsApp or on email address support@darkhorsestock.in. Thank you.
Thank you.
Mm.